Welcome back to Market Fatafat, a show where we are taking you through the list of all the stocks that are buzzing in trade today. And onto the show right now, we have Nirav Chheda joining us, and Nirav is from Nirmal Bang Securities. Hi, very good afternoon, Nirav. Let me come to you for your first stock. We were just discussing about the financial space, and Axis Bank is one of the counters in the space that has been showing resilience. What are the charts? How are the charts looking like for this one? And is that a buy coming in on Axis Bank?
Hi everyone, thanks for having me again. Axis Bank definitely is one stock that I like. Why? Because it has witnessed a multi-year breakout around that 820 levels, and post that it had gone very fast towards 900, retraced back, again retracked towards its breakout levels, retested it, and then now it is moving up again. I believe this stock has the potential to work towards that 950, 960 odd level, which was the high. So definite buy from current levels for that target of around 960. 860 should be a stop loss.
Okay, let's move on and keep an eye on this level for Axis Bank. Moving on to Siemens, and UBS has come out with a note on Siemens. They're maintaining a buy, revised the target price to 4,500 rupees per share. What they're highlighting for Siemens is that the peers have actually started reporting a positive set of numbers. That's giving a positive signal. Encouraging commentaries are coming in even from the global CEO. And recently, obviously, in terms of results, commentary by peers such as ABB, CG Power reflect a strong prospect and supported by the robust new order growth as well. Now, for Siemens, what UBS believes is that the read-through would be better than its peers, given that there's an increasing investments in the high-growth segments with expanding value chain coverage, low voltage and mobility, coupled with healthy order pipeline and much improved short cycle demand trends. Other than that, obviously, commentary during the global CEO recent India visit implies a rising focus on India's manufacturing landscape for Siemens globally as well. So that is why they're quite positive on Siemens, believe that there could be a good order intake as well, driving better growth for the company, and that is why they've increased the target price from 3,900 rupees to 4,500 rupees.
Okay, moving on to the next stock in focus, and that is KSB Limited, another result candidate, and we are seeing a fall in this particular counter on the back of the earnings, which is where the company has reported a revenue that is seen at 490 crores versus 418 crores. That's a jump of 17% on a YY basis. The EBITDA was almost flat at 57 crores, but the net profit has also seen a muted growth with a jump of just 1.2%. But look at the margins, there has been a fall, and that's the reason why you are seeing a fall onto the stock price as well, because of disappointments coming in with 11.7% of the margins versus 13.1% on a YY basis, a fall of 141 basis points. So that was KSB Limited, why you are seeing the stock under pressure.
Okay, let's move on. And Nirav, good afternoon. And the next stock that I've picked out for us is EPL Limited, SL Propack as it was known as before. What are the charts indicating for this one? Last 1 month, 17% return. So how much more upside?
Yeah, so a couple of weeks back I had recommended this as a buy in this show itself, which was the stock was around 162 odd levels. It has moved quite significantly from there, no doubt, but I believe this is a bigger breakout, and most definitely this stock can move up higher. It can go up towards that 220, 225 odd levels. So look to buy at current levels. You can get a good 10-15% even from current levels. 176 is a good support area. That should be the stop loss. Go ahead and buy. It's a multi-year breakout, a consolidation breakout as well, and very good buying at the lower level. So all in all, it's a buy.
Okay, moving on to the next counter, Ashesha from the Pharma Pack. Lupin is definitely buzzing on the back of the earnings as well as the management commentary. So tell us what the management actually told.
Set of numbers have come in from Lupin this time around. In fact, revenues for the quarter gone by have seen an uptick of about 12% on a year-on-year basis. Margins have expanded this quarter, and company has reported a profit in the quarter gone by of about 236 crores versus a loss of 517 crores that the company reported same time last year. Management commentary, meanwhile, was also quite positive. They say they saw improvement in operating margins in the quarter gone by on account of improved growth in India as well as improvement in margins that we saw in their US portfolio. They say US margins improved for third quarter in a row, and FY24 growth will be led by sales force expansion as well as new product launches. So good set of numbers have come in. Management commentary is quite optimistic, and that is the reason the stock is holding up with gains of nearly 2%.
Absolutely, holding on to gains. But let's listen in then to what the management themselves had to say. Here's a snippet of the conversation.
We're back to growth. Strong double-digit growth is what I would expect. If you look at, respiratory, if you look at cardiac, if you look at newer areas like GI, if you look at even CNS, you see strong growth across the board. And that's something that we would expect to continue through the quarters now. So double-digit growth is what we would expect.
So combination of margin improvement, stabilization of the inline business, plus the new product launches, we're very optimistic that fiscal year 24 is going to be a strong year for the US.
That was the management of Lupin. A double-digit growth expected for the US and the Indian markets, as well as the margins are also expected to expand. But let's move on to the next counter in focus. And Harsh, coming to you, SCI, which is flying high, the gains of over 6%. Tell us what's happening here.
Yes, so revenue has expanded 8.5% on a year-on-year basis. It's come in at 1,418 crore versus at 1,309 crore, same time last year. Calculated EBITDA has come in at roughly 465 crore, which is a 41% jump on a year-on-year basis. It's a very solid number versus the 329 crore number same time last year again. Expenses this time have actually moderated versus when I'm looking at it same time last year. So that's a big positive. Profit after tax therefore has expanded a very solid 156% on year-on-year basis. But part of that is attributable to certain tax reversals that have come through as well. In fact, on a net basis, they've actually accounted for a tax reversal of 106 crore versus a tax payment of 106 crore same time last year. So when I'm looking at the PAT number of 380 crore versus 148 crore, maybe not an exact comparable, but actually it's expanded by around 20 to 30 crore if tax base was the same. So largely that's how one should look at it. But EBITDA margins have expanded, and that's a positive because margins have gone up by around 7.6% on a year-on-year basis, and that's probably why the stock is flying away in trade.
Absolutely flying away in trade, gains of 6% for SCI, Shipping Corporation of India. Let's move on and talk about Heritage Food. Nirav, should we expect it to fly high as well?
This stock from the past 1 year, it has attracted a lot of volume. A lot of delivery-based buying has gone in. Also, in the interim, a rights issue had come in. That is why, that halted the charge for this particular stock. I believe now it is ready to move up and quite significantly at that. So definite buy from current levels. The overall chart is positive and it should move up now towards that 225, 250 odd levels. Look to buy from at current levels. 160, 168 is a good support area. So that is where the stop loss should be placed, and probably in the next couple of weeks you can see 225 come in very soon.
Okay, let's move on and keep an eye out on those levels for Heritage Foods. But talking about Apollo Tyres then, how was this one in terms of numbers? When you look at it, the earnings for the company, revenue saw a growth of around 12% on a year-on-year basis. Profits saw an increase coming in as well. But compared to the other tyre companies, the margins were a bit lower compared to the other tyre companies. So that is, some bit of a pressure that is coming in over there. Though, yes, on a year-on-year basis, they've seen an improvement sequentially. A bit of a subdued performance is what is coming in there. And that is why we're seeing Apollo Tyres is down almost 3% in trade as of now, trying to push up and make that recovery there. But nothing exciting there. Down almost 3% in trade.
Okay, moving on to the next counter in focus, and that is Aarti Industries. That's on the back of a weak set of numbers coming in for this particular counter. This time around, if we see the revenues, that has come in at 1,826 crores versus 1,642 crores. Other than that, the profit has now been almost flat at 149 crores versus 146 crores. And if we look at the EBITDA of the company, that has also been flat with a number at 252 crores versus the number back then was 262 crores. That was on the back of the growth in the volumes the company had witnessed, but looking at the expansion plans, that is not very great. There has been prolonged softness in the key end segment demand, driving slower margin expansion, and potential slippages in the new projects have been the key concerns that the analysts have been highlighting. The demand risk have been in the place since the second half of FY23 and have underpinned a 19% stock derating already. But given the fact that there has been no substantial improvement in the Q4 numbers, we are seeing a disappointment from the investor side, and the stock is down about 8.5% right now.
Okay, let's move on. And the NCLT has actually admitted its insolvency application, Go First's insolvency application, and appointed Abhilash Lal as the interim resolution professional to run Go First. Now, the NCLT has also directed IRP to keep Go First as a going concern and not retrench any employees. Let's listen into what Kaushik Khona, the CEO of Go First, had to say on this.
Millions of prayers have been heard, and I think we could not have got a better order than this. Employees are with me, and my employees, I have been interacting with them. I will have an opportunity to meet them today or tomorrow, subject to when I reach them, and I'm sure they are all excited. I've got many messages from employees that they are very happy that this admission is already there.
Okay, let's move on and continuing highlighting all the stocks that are buzzing. And Nirav, coming to you for the next one, you have picked up Blue Dart. We don't discuss this stock very often, so how are the charts looking like for Blue Dart, and what is the trend that you are picking up?
So this stock, it was flavor of the season in the last year, but post it hit 9,000, it is coming down. From 9,000 odd, it's come down to about 5,600 odd. So a huge drawdown for this stock, but it has made a pattern where a reversal is in place. 5,500, 5,600 is a very good base for this stock. It is making a good base formation. Delivery based buying is going on, and volumes have picked up as well. So I believe this stock is now headed up towards that 6,500 to 6,700 odd levels, which has generally been a resistance zone for this stock. So I believe one can be buying this stock with a small stop loss of 5,600, 6,500 odd. Once it comes there, that is where you book your profits.
Okay, let's keep an eye on that one. But let's move on and talk about SRF Limited, Ashesha. What is it that is keeping the stock abuzz today?
Yesterday informed the exchanges that there is an increase in capital expenditure that their company will be incurring. Remember, in January, the company had said that they will be setting up a facility to manufacture aluminium foil, which will be done at an estimated cost of about 425 crores. Yesterday, the company has updated that expenditure, and now they are saying that the cost to manufacture or to set up this facility of manufacturing aluminium foil will cost about 530 crores. So there's an increase in capital expenditure that has come through. They say this is due to changes being made to the machine configuration to enhance output, product portfolio, along with some increase in civil and pre-operative expenditure as well. But remember, this increase in expenditure is not going to increase the output, and the operational feasibility of the manufacturing facility is expected to remain same. So on the back of this increase in expenditure that has come in, the stock is under pressure today. It is sitting with a cut of over 1% as we speak.
Moving on to another candidate, and Harsh, coming to you for Castrol India. Tell us what is the news flow out here.
Well, earnings, Srishti. So what we're looking at is a bit of a contraction in margin. But before I get there, let's talk about revenue first. Revenue rose around 5% on a year-on-year basis. It's come in at around 1294 crore versus the 1236 crore same time last year. EBITDA, though, has actually come off 7% lower versus last year. It's come in at 295 crore versus the 318 crore number. And what we are therefore seeing is a largish margin contraction. Margins have contracted around 2.9%, nearly 3% down on a year-on-year basis. It's coming at 22.8% versus that 25.7% number same time last year. Of course, when I'm looking at it sequentially, margins have expanded a wee bit, but the year-on-year number showing a contraction, and net profit therefore has gone down by around 11% on a year-on-year basis. It's come in at 203 crore versus the 228 crore same time last year number. So what we're seeing on the back of all of that is the stock is actually lower in trade today.
Okay, let's move on and talk about Lumax Industries on the charts then. Nirav, how is this one looking like on the charts? What are the indications and target levels coming for this?
There's an inverse head and shoulder breakout for this stock, and that has come around the 1800 odd levels. After a long time, this stock has moved up with a multi-year breakout as well. The volumes are little low, but I think one can be buying this for delivery, and the stock can come up towards the 2500 odd levels very aggressively. Last couple of days it has been consolidating, but the breakout is in place, and one should be buying this stock from at current levels good fundamentally as well. Your stop loss should be around 1780, and your possible target can be around 2400 to 2600.
Let's move on and talk about Nazara Tech on the numbers then. What we're seeing coming in for the March ended quarter is that the consolidated revenue from operations has come in at 289 crores, which is up by 65%. Profits of the company have seen a growth as well, but yes, when you look at it a bit on a sequential front, that maybe is something that is impacting the companies of the profits of the company, as well as in terms of overall the stock price of the company as well. Now, in terms of other than that, the EBITDA performance also has come in at 27 crores as compared to 12.9 crores. Advertising and promotional spends, that has come in at 47 crores versus 51 crores last year. Keeping an eye out on that one, the stock is not doing anything exciting in trade as of now. It's down almost 3.2% this as we speak.
Okay, moving on to the next counter in focus, that is MGL, and this particular company has come out with its earnings, and yesterday on the back of MGL earnings we did see the rub-off impact into the whole sector, where the sector was seen to be buzzing, and today JP Morgan has come up with a note where they maintain their overweight rating on this particular counter and have hiked the target price to 1240 rupees. That's almost 200 rupees higher from the current market price. From 1040 crores is what the JP Morgan was targeting earlier. They say that the Q4 has been a beat on the higher margins. The volume growth remains robust. Broadly a positive environment for the city gas distribution companies, and they are also highlighting that MGL is a re-rating candidate. After a sharp move of gains of around 7.5% yesterday, the stock is continuing the momentum as of now, up around 1.2%.
Okay, let's move on. And Ashesha, Prism Cement and Prism Johnson, as we know it as, what is the number looking like to this one in Q4?
Well, yes, this one reported its numbers just an hour ago, and a weak set of numbers have come in. Revenues for quarter gone by stood at about 2,112 crores, which is an uptick of about 14% on a year-on-year basis, but the net profit has declined a whole lot. In fact, net profit has come in at just 4 crores versus 20 crores that the company reported same time last year, which means on a year-on-year basis, profitability has shrunk by about 79% on a year-on-year basis. Weak set of numbers have come in, and that is precisely what the stock is reacting to, holding on with a cut of over 1.5%.
On, and just a few minutes ago we saw JBM Auto that came out with its numbers as well, and when you look at in terms of the numbers coming in for the company, we're seeing that the profits of the company have seen a sharp decline this time around. Profits have come in at 28 crores nearly versus last year. What was there was 86 crores. JBM Auto stock that we're talking about down 67.2% on a year-on-year basis. Even the margins of the company operating performance seems to be weak as well. So margins of the companies have seen a contraction of 10.6% versus 11.5%, almost a 100 basis point contraction in terms of the EBITDA margins of the company as well. Revenues to seeing a decline of 6%, nothing exciting there, and that is why the stock is nosediving down 6% in trade as well.
Okay, JBM Auto was the counter that has seen a great run up, was trading near its life high levels, and now falling after the earnings. But moving on, and Nirav, coming to you for the next one, BPCL is the counter that you have picked up. Tell us how the chart's looking like for BPCL.
So a very big consolidation even for this stock. The crude was going up, which was negative for this one, and now it is stabilized. So you are seeing some good buying action coming here. Most importantly, the shorts that were in the system have been covered, and now we are seeing longs being built in, not very aggressively, but yes, they are being built in. Also, inverse head and shoulders breakout around the 350 odd levels has come in for this stock. So it is all going for this stock. It can now remain in this positive zone for quite some time. It can go up towards 425, 430 odd levels. Look to buy the stock at current levels. 355 should be your stop loss, and around 420, 425 should be your target.
Okay, keep an eye on those levels for BPCL. But let's move on. And Harsh, Mankind Pharma listed just yesterday. What's the update that you have today for us?
Well, yes. So, Antique has initiated, its view on Mankind Pharma, and what they suggest is they've done so with a strong buy, target price at $1,584 a share. Now, mind you, stock listed at 1080 rupees a share, and currently sits with a solid 28% gain, 1370, despite the slight decline today. Now, what Antique is suggesting is that Mankind is a market leader when it comes to tier 2 to 4 towns, and now they're going to shift focus towards metro and tier 1, and that focus should aid the top line of Mankind Pharma. This should be the new growth driver for Mankind Pharma going forward. They also expect the India business to grow at around 13% CAGR for the next 3 years, so that's a positive. And they really like Mankind's India franchisee, which, given its diversified therapy mix as well as brand contributions, both of which are contributing well to the entire profit and loss of Mankind Pharma. So largely they're positive, and they've given it a buy with a target price of $1,584 a share.
Okay, let's move on and talk about Westlife Foodworld. This stock is in focus. Yes, during yesterday, approximately at the end of the market hours, nearly there, the company reported its numbers. Now, in terms of just what the management commentary specifically that came in was that they're highlighting that they expect the margins to be about the 17% level in FY24, and other than that, the margins are expected to keep on staying in the range of 18 to 20% and keep growing furthermore every year till 2027. In SSSG growth, they're expecting a high single-digit SSSG growth, so 7 to 9% is what they think will be the SSSG growth going forward. A maintainable level would be around those levels. Other than that, they also said that they believe and they want to actually focus on increasing their reach in McCafe to 100% of their restaurants, and in, the average sales stores for McCafe will double in the next 5 years. That's a word coming in from Westlife Foodworld Management. Today, the stock is trading with gains of almost 14% on trade as of now.
Okay, moving on to the next counter in focus. Nirav, coming to you for L&T Finance Holding. This particular has been showing resilience in the financial space, given a breakout a couple of days back. So how do you see that momentum continuing for L&T Tech, L&T Finance, I suppose?
Yeah. So, this stock has witnessed a 6-year breakout post 2017. The breakout has been retested in this recent fall of around 80 odd levels, and now the stock has bounced back and it has gone above its previous high as well. So two things it has done: it's made a higher top, higher bottom formation. The trend has changed to positive, and now this stock is set up to move up towards that 125, 130 odd levels, and that also can come very soon. So aggressive buying can come into this stock. Look to buy the stock at current levels. 90 should be your stop loss, and the near term target should be around 115, but this stock can go up towards that 130 odd levels as well.
On to the next counter focus on Zomato has been a recent buzzard this time around on the back of the whole setup that is panning out for the food delivery space. And today, Bupa Securities has come up with a note where they maintain their neutral rating with a target price of 72 rupees. Sorry. They expect ONDC to remain as the key platform in this space, currently not bullish of the garnering a large market share in the food delivery space, but because they feel that the end-to-end control is the key for good experience, and the high-end users that are there on Zomato and Swiggy are sensitive on the delivery times and not necessarily very price sensitive. So the tech of Zomato and Swiggy gives them the better control on the time utilization of the delivery guys, and they expect the news flow on ONDC to continue, but may keep the Zomato stock price a bit volatile. But all in all, they are highlighting that the competition that is building up in the food delivery space can't get that steeper, and that's the target price for Zomato.
Okay, And with that, that was the last talk for today. Thank you so much, Nirav, Ashesha, as well as Harsh for joining in with us, and Aditya as well for giving us your views before. But with that, we're absolutely out of time on this edition of Market Fatafat. Thank you so much from Shrishti, myself, as well as the team who put this show together.